Preparing for a Banking at Alinma Bank interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work at Alinma Bank? Alinma appeals to me because it combines a strong Saudi banking franchise with a fully Sharia-compliant model and a visible digital push. I see the bank benefiting from Vision 2030, growing retail participation, SME financing, and corporate activity. In an interview, I would connect my interests to customer trust, disciplined risk management, and scalable banking technology. I would also show that I understand Alinma is not just a bank, it is a financial partner in Saudi growth. While answering, focus on Alinma's Sharia-compliant identity, Saudi market position, digital banking focus, and how your skills align with customer service, risk discipline, and Vision 2030-driven growth. Question 2. What do you know about Alinma Bank's business model? Alinma's model is built around Sharia-compliant retail, corporate, treasury, and investment services. Revenue comes mainly from financing income, fees, cards, transaction banking, and investment-related activities, rather than conventional interest terminology. I would frame the bank as a balance sheet business. It gathers customer deposits, deploys them into compliant financing, manages liquidity, and earns spreads and fees. The quality of assets, funding stability, digital adoption, and customer service are the key drivers of performance. Make sure to cover Alinma's main business lines: how Islamic banks earn financing income and fees, the importance of deposits, and the balance between growth, liquidity, asset quality, and compliance. Question 3. How is Islamic banking different from conventional banking? The core difference is that Islamic banking avoids interest-based lending and structures transactions around asset-backed, risk-sharing, or trade-based contracts. For example, instead of a simple interest loan, a bank may use Murabaha, Ijara, or Musharaka, depending on the customer need. I would stress that Sharia compliance is not just product wording. It affects documentation, profit recognition, approvals, and governance through the Sharia committee. Commercially, the bank still manages credit, liquidity, and profitability. In your answer, talk about prohibition of interest, asset-backed structures, Sharia governance, common contracts such as Murabaha and Ijara, and the fact that risk management remains similar to conventional banking. Question 4. Can you explain how a Murabaha financing structure works? Murabaha is a cost-plus sale structure. The bank purchases an asset requested by the customer and sells it to the customer at a disclosed markup, usually with deferred payments. If a customer needs equipment worth SAR $1 million, the bank may buy it and resell it for SAR $1.1 million over an agreed tenor. The key points are asset ownership, clear pricing, valid documentation, and no compounding interest. Credit assessment remains essential. Be sure to mention the cost-plus sale mechanics, bank ownership of the asset, disclosed profit margin, deferred payment, documentation discipline, and why Murabaha is widely used in Islamic financing. Question 5. How would you assess the credit risk of a corporate customer? I would start with repayment capacity, not collateral. For a corporate customer, I would analyze financial statements, cash conversion cycle, leverage, profitability, debt service coverage, industry outlook, and management quality. Then I would review facility purpose, tenor, security, guarantees, and Sharia structure. A strong answer also mentions stress testing. What happens if sales fall, receivables stretch, or input costs rise? The recommendation should link limits, pricing, covenants, and monitoring frequency. While answering, focus on cash flow repayment capacity, financial ratio analysis, industry risk, management quality, collateral, guarantees, facility purpose, Sharia structure, and how covenants and monitoring reduce credit losses. Question 6. What is non-performing financing, and how does provisioning work under International Financial Reporting Standards 9? Non-performing financing usually means the customer is significantly overdue or unlikely to pay, commonly 90 days past due, depending on policy and regulation. Under International Financial Reporting Standards 9, provisions are based on expected credit losses, not only incurred losses. I would explain Stage 1, Stage 2, and Stage 3. Performing assets, significantly increased risk, and credit-impaired assets. For Alinma, this affects profitability, capital, risk appetite, and how actively relationship managers monitor early warning signals. Make sure to cover default indicators, 90-day past due logic, International Financial Reporting Standards 9 expected credit losses, staging, provision impact on profitability and capital, and the role of early warning signals. Question 7. Why are deposits and CASA balances important for a bank like Alinma? Deposits are the raw material of a bank. A higher base of stable current and savings accounts lowers funding cost and supports better margins, especially when market rates move. In Islamic banking, deposit structures must also be Sharia compliant, often using investment or agency concepts. I would connect CASA growth to customer relationships, payroll accounts, digital banking usage, and cross-selling. Strong deposits let Alinma finance customers competitively while protecting liquidity and profitability. In your answer, talk about CASA deposits, funding cost, liquidity stability, margin protection, customer relationship depth, payroll accounts, digital engagement, and why deposit growth supports competitive Sharia-compliant financing. Question 8. How would you handle an angry customer disputing a banking transaction? If a customer is upset, I would first listen without interrupting and confirm the exact issue, amount, date, channel, product, and expected resolution. Then I would check records, explain what I can verify, and avoid promising something outside policy. In a bank, tone and documentation matter, because complaints can involve money, trust, and regulation. I would escalate when needed, follow up within the committed timeline, and close the loop clearly. Be sure to mention empathy, fact-gathering, documentation, policy boundaries, escalation, follow-up commitments, and why complaint handling in banking must protect both customer trust and regulatory expectations. Question 9. What does KYC and AML mean in a banking role? AML and KYC protect the bank from being used for illegal activity. Practically, I would verify customer identity, beneficial ownership, source of funds, expected account activity, sanctions screening, and risk rating. The work does not stop at onboarding. Unusual transactions must be monitored and escalated. At Alinma, I would treat compliance as part of customer service, because clean documentation and timely questions protect both the customer and the bank. While answering, focus on identity verification, beneficial ownership, source of funds, sanctions screening, customer risk rating, ongoing monitoring, suspicious activity escalation, and the reputational importance of compliance. Question 10. Which ratios would you review to evaluate the financial health of a bank? I would look at asset quality, profitability, capital, liquidity, and efficiency together. For a bank, useful indicators include non-performing financing ratio, coverage ratio, net financing margin, cost-to-income ratio, return on equity, capital adequacy ratio, and loan-to-deposit ratio. No single metric is enough. For example, strong growth is positive only if credit quality and funding stability remain sound. I would compare trends over time and against Saudi banking peers. Make sure to cover asset quality, profitability, capital adequacy, liquidity, efficiency, peer comparison, trend analysis, and why banking performance cannot be judged from one isolated ratio. Question 11. How do you see digital banking affecting Alinma Bank's growth? Digital banking matters because customers expect fast onboarding, instant payments, card control, and mobile-first service. For Alinma, digital channels can lower cost to serve, improve data quality, and support cross-selling. The risk side is equally important: cybersecurity, fraud monitoring, operational resilience, and customer education. I would position myself as someone who supports innovation but understands banking controls. A good digital product must be convenient, compliant, secure, and reliable. In your answer, talk about customer convenience, lower servicing cost, data-driven cross-selling, faster onboarding, cyber risk, fraud controls, operational resilience, and the need to balance innovation with banking controls. Question 12. How would you handle a high-volume branch or operations day with many urgent requests? On a high-volume day, I would prioritize transactions by urgency, regulatory sensitivity, and customer impact. Cash, account access, complaint cases, and time-bound approvals need clear triage. I would communicate expected waiting times, keep documentation organized, and ask for support before service quality drops. In banking, speed cannot come at the expense of accuracy. My target would be simple: serve customers efficiently while protecting controls, confidentiality, and audit trails. Be sure to mention prioritization, accuracy under pressure, queue communication, regulatory sensitivity, confidentiality, escalation for support, and protecting audit trails even when customer volumes are high. Question 13. What is asset liability management, and why does it matter for a bank? A bank earns by transforming deposits into financing, but it must always remain liquid. Asset liability management matches maturities, pricing, currencies, and behavioral assumptions across the balance sheet. If deposits reprice faster than financing assets, margins may compress. If long-term financing is funded with unstable short-term deposits, liquidity risk rises. I would mention SAMA requirements, internal limits, stress testing, and contingency funding plans. ALM links daily banking decisions to enterprise risk. While answering, focus on maturity matching, repricing risk, liquidity buffers, SAMA requirements, stress testing, contingency funding plans, and how ALM connects balance sheet decisions to profitability. Question 14. What would you do if a colleague or manager asked you to bypass a banking control? If I saw a shortcut that could breach policy, I would raise it respectfully and factually. I would explain the specific control risk, such as incomplete KYC, missing approval, or unsupported customer instruction, and suggest a compliant alternative. I would not make it personal. If the issue remained unresolved, I would escalate through the proper channel. In a bank, professionalism means protecting customers, colleagues, and the institution, even under commercial pressure. Make sure to cover respectful challenge, specific policy risk, compliant alternatives, documentation, escalation routes, and the principle that banking culture must prioritize customer protection and institutional integrity. Question 15. How can Saudi Vision 2030 create opportunities for Alinma Bank? Vision 2030 creates banking opportunities through housing finance, SME development, infrastructure, tourism, capital markets, and digital payments. For Alinma, that can mean more financing demand, more payroll and retail relationships, and broader corporate transaction banking. I would also note the risk side. Rapid growth requires disciplined credit underwriting and operational capacity. My answer would show optimism without sounding careless. Banks that grow with strong controls can capture the opportunity sustainably. In your answer, talk about housing, SMEs, infrastructure, tourism, digital payments, capital markets, increased financing demand, and why disciplined underwriting is needed to turn Vision 2030 growth into sustainable returns. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.